Hi, Devin Lucas here with Lucas Real Estate Group, here to talk to you about the 2025 capital gains tax rates. Well, what are capital gains when we talk about real estate? Quite simply, it's the gain or the profit you make in the sale of real estate. So for example, if you bought a house for $500,000 and you later sell it for $2 million, well, on paper, you've made $1.5 million, and that's going to be your gain, which may be subject to capital gains taxes. Now, there's lots of exemptions, such as the 121 exemption. Maybe you're going to do a 1031, lots of other things like that we can talk about. But for our simplistic purposes and our examples we're going to talk about here today, let's just say that $1.5 million is pure profit and you're going to pay taxes on it. So in 2025, what does that mean? Well, let's get into it. So each individual bracket is going to determine what you pay on both the state level and then the federal level. So for example, for single filers, if you make up to $48,350, you're going to pay $0 in capital gains. Now, between $48,351 all the way up to $533,400, you're going to pay a 15% capital gains, and then anything over that's going to be 20%. Now, if you're married and filing jointly, it's not exactly double the figures, but it gets a little interesting. So up to $96,700, in that case, you'd pay $0 capital gains. But between $96,701 all the way up to $600,050, you're going to pay 15% capital gains. Anything over that $600,050, it's going to be a 20% capital gains. So currently, the maximum federal rate is 20%. However, it gets a little more complicated. We've got the Obamacare tax, which was part of the Affordable Care Act. So if you make more than $200,000 as modified adjusted gross income as an individual, or $250,000 modified adjusted gross income as a married couple filing jointly, you're going to pay an extra 3.8% tax. So in other words, now we're taking that to a maximum federal rate of 23.8%. Now, don't forget about the state of California, because California is definitely going to want its tax too. California doesn't exactly do capital gains in the same way the federal government does. They look at it as total income. So for example, if you make $200,000 regular salary that year and you make $300,000 in capital gains, California is just going to put it all together and say you owe us the equivalent of a $500,000 salary. And they've got their own brackets. In California, the highest bracket, which is for those earning over $1 million a year or more than $1 million in capital gains, is 14.4%. So you take that high end of the federal level, high end of the state level, you're looking at a potential 38.2% capital gain at the maximum number. That's fully over 1/3 of the profit of the sale out the window in additional taxes. For additional information on some tax exemptions and things you can do to minimize that amount, reach out today.